I think that this junior miner is gonna get bought out, and here's a quick rundown why. The Duquesne West project by Emperor Metals is in one of the most prolific mining regions in Canada, and they're surrounded by a lot of producers, and two of them are Agnico Eagle and the other one is McEwen Mining. And so here's the interesting thing. It was really fun to connecting the dots on this one. I mean, obviously, it's not sure that this is going to happen, but to me, this is kind of a pretty obvious, interesting setup. So at Emperor Metals, and we've got the CEO, John Florek. And John, he basically worked for Agnico Eagle. So, I mean, that is a good thing. And what happened pretty recently, he was nominated to the board of directors at McEwen Mining. I think that happened because, like, John, he's really famous for his knowledge on how to use AI and just bring the exploration process to a somehow more advanced digital age.
At the forefront of AI-driven exploration is Emperor Metals Incorporated.
This is the only junior mining company leveraging artificial intelligence.
Emperor leveraging artificial AI in the selection exploration.
And for a company like McEwen, it just makes sense to get the person who knows it very well and just lay that out through all the projects that they have. Okay, so McEwen Mining, as the name suggests, they were founded by a guy named McEwen. So what did this guy do? As I said, he's the founder of the company, and this guy recently, he invested personally into Emperor Metals, which is nice. So like that already is a nice setup for the whole thing. Then there's another guy who is pretty famous. His name is Rick Rule. Rick Rule, he also has this conference where he's basically only showing companies that he's invested in, and he invested as well in Emperor. And because it would be too boring if there would be not more connections, Rick Rule, he also is a friend, basically, of McEwen. So this setup we just talked about would already be enough to be a proper investment case. But yeah, let's still talk about the business itself. Sure, disclaimer, I'm Andy. Here I'm just sharing my personal insights on early stage investments. Nothing what I'm saying here is financial advice or something. Stock investment is risky. You can lose everything, especially in early stage company. This is what I'm personally most interested in, because this is where you can get the huge payoffs. But please don't rely on me. Do your own research. And I'm compensated for doing this video. I'm doing this together with the MK Investment Conference. I'm not paid by the company itself. I think you should still know that. And I personally own shares in this company. So I'm kind of excited to see how it plays out in the future. Let's get back to the video. So sector and stage. Emperor is, as we've already heard, in the junior mining sectors, and they've got two projects, and they're in the stages of basically making sure that there probably is enough in the ground. In our model, that would be the exploration, defining and modeling the resource phase. So they do this by analyzing the drill cores from the prior owner to get a resource, like Pelletier, and in the project that I just said, where I just explained that a nice setup, the Duquesne West, they're doing more advanced exploration to grow the resource. They've already shown a resource of 1.46 million ounces, and they want to get it above 2 million ounces. Why 2 million ounces? 2 million ounces often seen as a threshold for making a project attractive for a major, which is like kind of important for the buyout setup that I just described before, or for supporting robust economic studies. Because it's good if you already have a size that can actually be a mine. And with less than that, projects sometimes struggle to justify mine development costs. You need to have a proper size in order that it makes sense to build all the stuff that you need to extract it and process everything. So how quickly those projects will move to the next stages differs. So the newly acquired Lac Pelletier project with a historical resource can move quicker. It's basically in the resource classification stage, and in order to justify to testing in the economics, which they would do through a PA, preliminary economic assessment, they first want to pre-qualify the environmental checkbox, because if they cannot check that, it obviously doesn't make sense to move ahead. So they just want to make that sure before spending tons of money on the next step. They're doing a study on that basically, and both steps are planned to be finished in 2025. So that's good news flow coming there. And for the Duquesne project, I can't really estimate the timeline. So that will be explained later by John Florek, the CEO, on what their plan is with that. For me personally, everything that I drew in the beginning is all I need to know for myself personally about the project. What's in the deposits of those projects? So basically both are pure gold plays. Infrastructure around is awesome.
When people say how far am I to infrastructure, I say 0 kilometers.
Tons of mines around. There's lots of producers. That's we touched on that a bit in the beginning, but maybe let's have a quick look into the surroundings. So it's called the Abitibi Greenstone Belt, and this is located in Ontario and Quebec. It's between two cities called Timmins, Ontario, and Val-d'Or, Quebec. And this basically is just a 300-kilometer drive, which is small for Canada. As I said, there's lots of mines around. If you just look at that slide from their presentation, you can see that it's basically a place where you'd think there should be another mine, right? And it definitely feels to be feasible to build something there, as there's already so many mines. And that also means infrastructure is good. So you don't have to build all of that. That brings all the costs down and all the things that could stop a project.
Even if I view this as a satellite deposit, because it's so close to infrastructure, I wouldn't have to build a mill. I wouldn't have to build a tailings dam. When it comes to building these mines, the CapEx expenditures for something like that could run close to $1 billion. You wouldn't have that here because of all this infrastructure.
Lots of those check boxes are already checked with that. But who's driving that forward? The face of the company is John Florek. He's a geologist, CEO and director of the company, and he got more than 30 years of geological and executive leadership experience in the mining sector. That's how NASDAQ states it. And he worked for both majors and juniors. The majors that he worked for is like the Hemlo gold mines and Barrick and Placer, famous names. And as a senior geologist, he contributed to a mine life extension of a big project where they got some award for it. How was it called? 2008 Developer of the Year Award from the Northwestern Ontario Prospectors Association. Then he also was at Detour Lake Gold Mine. That's Kirkland Lake Gold, Agnico Eagle. Served as a superintendent there for 5 years. And then his team played a key role in advancing the Detour Lake into a major long life open pit gold mine, which later on was acquired by Agnico Eagle.
The open pit Detour Lake operation is the largest gold producing mine in Canada with the country's largest gold mineral reserve.
And he did so by early adapting AI in the junior mining sector, which is great.
Through Florek's previous work at Kirkland Lake using artificial intelligence, his team was able to increase profitability substantially for the life of mine with an in-house grade control model using these concepts.
And this actually was somehow the basis for this company. He used this knowledge to basically guide quick advancements in parametals itself.
So our geologist John Florek used it for Detour Lake, back in 2016. He went there and used it to create a grade control model, which increased the amount of gold going through the mill by 20%. Same model that Agnico Eagle uses today. So he increased the amount of gold going through the mill by 20%. That's incredible.
And he made, as I already said, he made himself a name for that, and that's the reason why I think that a person like McEwen definitely wanted him, on his board as well. Why he's got into the board of directors there. It really makes sense for a big company to get a person like this on board. And Rob McEwen himself said the following. He said that he's pleased with the progress Empire Metal has made with the Duquesne West Gold project and the recent acquisition of the Pelletier project. The company's innovative use of AI and machine learning for project evaluation and resource modeling is truly unique, and I'm excited to see how these advancements will drive future growth. So that kind of sounds great. So let's dive more into the goal and strategy of the different projects. What John has to say about it. Like I gave you my opinion on that, but he's the CEO of the company. He should know better than me. What he really wants to do with that. So let's go and ask him. What's your goal with the Duquesne project?
Oh, Duquesne West?
Yeah.
Well, that's a good question. We want to build this out to a tier 1 deposit. Our tier 1 deposit is 5 million ounces or more. And recently we just doubled our resource from 727,000 ounces to 1.46 million ounces. So that's pretty exciting because once you break that 1 million ounce hurdle, it suggests mine life. That way institutions and major mining companies will start looking at the project closely.
What's the step? What's needed to get it to the 5 million?
More drilling. So right now, if you look at the footprint of the deposit area, we probably need about 500,000 to 600,000 meters of drilling. We only have 120,000 meters of drilling. So we only got about 15% of this footprint drilled off. And we already have 1.5 million ounces. So think about the growth potential that we have. If you look at other analogs in the district, they're at 600,000, 700,000 meters. Some of them, with that amount of drilling, they published results of 1.5 million ounces or 1.6 million ounces. So we're well on our way to something significant here.
How long is it going to take you until you've doubled it again?
Yeah, so what we want to do is drill another 100,000 meters to double it again. But probably when we reach the 2 million, 2.5 million, we'll seriously start looking at a PEA, a preliminary economic assessment for the deposit, for the economics and stuff like that. So all the economics look pretty good. We did some benchtop, recoveries were 90% plus. So that's pretty exciting.
For the other project, for Pelletier, I hope I spelled it right. I don't speak French. Pelletier, is that?
Yeah, that's good. Yeah. Well, we're in Germany, isn't France nearby?
It is. I studied Latin in school, right?
I studied Latin too, actually.
And Spanish. I went for Spanish.
Yeah, Spanish is so easy, right?
Well, I prefer that over French. Never mind. I don't want to disturb the Canadians. So.
Yeah, there you go. No problem.
I love your French, guys. Okay. What for the Pelletier project? What's your goal with that?
Yeah, so Pelletier, it's kind of a unique asset. There's 3.3 kilometers of underground workings. It was a deposit, that was ready to go into production, but it got stalled.
What happened?
Yeah, that's a good question. A larger entity took over this Alexis, and basically it wasn't big enough for them. There's certain hurdles with different companies on what they would want to proceed with for mining, and they shelved it basically. And then it was basically dormant for the last 15 years. Right now on the books, it's 227,000 ounces, so it's not that 1 million ounce barrier. But what we do is, like we did at Duquesne West and we did it at Pelletier, we do AI modeling. And our model suggests that we could double that quite quickly at Pelletier, bringing up to like over 400,000 ounces, and then put it on a path to over 1 million ounces because it hasn't been drilled below 300 meters. And these deposits have greater depth extent than they do horizontal extent. So we're pretty excited about the growth opportunity there. But it has a mining permit in place of 1,000 tons per day. And with the grade is about 4 grams per ton, that would give you, that would give you about 40,000 ounces per year mining, which is good. 40,000 ounces at $2,500 gold is $100 million. So it's great for a small junior to start building a mining company.
What has to happen then you can actually bring that into production? What are the key milestones?
Yeah, so we establish the environmental authorizations to back the permit because it's been underwater for the last 15 years. So that's step number one, transfer the liabilities. Liabilities are currently with Eldorado Gold, transfer them over to Emperor Metals. And then we would probably dewater it, rehab the mine, and start mining.
Great. So how much drilling you think you'll have to do, or what are the things you want to do with that project over the next quarters?
Yeah, okay. So first thing is we have to do all that environmental work. We have to update the closure plan, number one. And then, as I mentioned, the environmental authorizations need to be done, and that might take a summer of 2 of sampling. So the earliest we could envision getting this thing into production would be probably Q4 of 2027.
And now we know what they're working towards. Let's see if they got the right people on board. The team is obviously crucial for actually driving those activities that we need to get to the next milestones, which are the points where the company is going to be worth more, right? So as John's history shows, he worked on the necessary project steps that we got to fulfill here. In big companies, obviously big companies have lots of infrastructure. And so let's ask him where he's getting now the right people from by not being able to rely on the resource and everything that you get as a geologist and project manager in such a big company. Who's the people that you have that you can actually do that?
Oh, we have all sorts of people like on the board. John Williamson, he's been involved with 20 different companies. 75% of them have been successful exits. He's a serial entrepreneurial geologist, has a lot of experience in the industry. Myself, I have 35 years in the industry. First half is in exploration, subsequent half is in production, both underground and open pit. Work for all sorts of majors. We have John Lebrecht. He's our vice president exploration. He's very good at, the exploration component of it. We have people on our team like Alex Horsley know how to navigate the capital markets. Collectively between the group, we've raised over $1 billion. Ian Harris, we have our token engineer. He's an independent director. He helped sell Corriente for $690 million down in Ecuador. He's with the Fiore group right now, but he's also an independent director with us. That's Frank Jusha's group. So we got enough people on the board level. In the region, it's a mature camp where we are. Over 200 million ounces have been produced already. So there's a lot of expertise in Quebec and Ontario. We're right at the border. So there's enough people in the district to help push this project along.
Yes, many mines are there. There seems to be some decent amount of people that actually know what they do.
Yeah. There's a whole slew of them. Everybody, if a mine like this, both Duquesne West and Lac Pelletier, if it went into production, people can go home at night. You don't have to do this fly in, fly out type jobs that you see in Canada and the far north. So that's kind of a benefit, right? Because people like to go home and see their families at night.
What's driving those guys to do that? I love incentive structure, important point. I mean, obviously, John Florek, in the setup that I described so positively, he's basically in the board of a company that might be a potential buyer. That's a clear conflict of interest, and he's working on different projects. But for me, it's like everything is obviously clear communicated. I don't see any problems with that, and I totally see that he's on the board with McEwen as a really confirmation on the skills and everything. And I really don't see that as something that's gonna affect the investor. It's actually a thing that probably drives things faster forward. Compensation of the executives and directors were mostly through stocks. Their 2025 salaries were below 500K in total, which is modest for a junior explorer at that size. And board of director holds 8.5% of the company, which is a good incentive to make sure that the company goes forward. This also means that big part of the compensation is going to come if they actually drive performance and just not do nothing. There's, as I already said, there's other important ownership in there. Rick Rule and McEwen, they probably invested around the 15 cents 15-cent slot, and McEwen is almost at 10% ownership, which is great. I mean, it's nice to have that big confidence of a person in there, of a private individual, which has made himself a name. And also, Imperial Metals was invited by Rick Rule to his symposium, where Rick Rule basically showcases his portfolio company. So that is also a big plus. Two names that know how to invest in the sector. This is nice. So let's see, how do the milestones connect with the financials. And on April 30th, we had 1.34 million Canadian in the bank. Let's see how much of that is still there and what they're planning to do with that. So how much are you going to spend on those projects over the next quarters to actually do that stuff, to do drilling and everything in the Duquesne West and the studies?
Yeah, so we're if you saw the press releases, we're oversubscribed on a $10 million financing that should be closing in a week or so. So that'll give us plus $10 million in the treasury. And then we'll use that for advancing Duquesne West and Pelletier. Just puzzled that when we look at our analogs and peers in the district, a lot of them are 200 million plus. We're at $30 million market cap right now. We doubled our resource. We really didn't see that re-rating happen yet. So I think we have a lot strong potential for basically a re-rating out of our stock. So, 30 million to make $200 million market cap. So that gives us a lot of leverage. And so we could have raised more than $10 million in this financing. It was oversubscribed, but we didn't want to dilute the stock too much at these levels. So we're going to wait until there's a lot of catalysts coming out, because we got over $10 million in the bank. We're going to be drilling. We're going to have a lot of catalysts, a lot of results, and the market can really see exactly who we are. So we were probably a little bit still unknown, and that's why I'm doing this interview with you, so we can get the word out on who Emperor Metals are.
Okay, so cool. The next quarters, we're gonna see studies and everything started like Pelletier. Let's see if the dewatering and that is gonna continue, and then we're gonna see probably doubling of the resource again at Duquesne West.
Yeah, Duquesne West it's going to be incremental, because we don't have enough money right now in the treasury to drill 100,000 meters. So we're going to drill and continue to grow that story. Once we break the 2 million ounce barrier, then we'll probably start looking at doing a PEA. And at Pelletier, the key thing is get the liabilities transferred over from Eldorado to us. We're in the middle of a gap study, and what we're seeing is that we have to, basically reestablish the environmental authorizations for the mining permit, because it's been underwater for 15 years. Once we do that, then we could apply for a dewatering permit, and then we're off to the races. Once it's dewatered, we could basically start rehabbing the underground workings.
Which of those
mining?
Which of those things are we gonna get done with the 10 million that we got to the bank now?
Oh, for Pelletier?
Well, it's for both projects, I guess.
Well, I guess a majority of the money right now, 80%, probably 70% will go directly towards Duquesne West to start basically drilling off that asset.